Good morning, traders. This is Michael coming to you from GammaEdge on Monday, December 30th with a pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: structure, sentiment, and trend. We'll start with the market trend model. As you can see, we did have a short burst of bullish type of looking action with the bolded white CT above the railroad track moving averages, but that failed pretty quickly there on Friday. As you can see, the bolded CT started moving back below the railroad track. We're still within the ribbon. That is our prone to failure area. So we continue to be cognizant of that. And then if we move back below the red area there, red still below cyan. So our long-term market model is still off. And we're always in a cautious, shorter term time frame, smaller size if you're looking to move or looking to do any type of counter trend trades. So as you can see this morning, obviously, if you've looked at any of the pre-market action, we're gapping down pretty significantly towards that 5,900 level. So we'll have to have a rapid recovery this morning in the CT and the overall railroad track to change that from a bearish state back to a bullish state. We'll go ahead and jump right into the SPX. PM settled here. All expiries turned on. We have a very wide transition. Obviously, if you've been here at GammaEdge for very long, you know that's extreme uncertainty in the market. We do see that JPM short strike up there at 60.50. I don't anticipate or not looking to anticipate that we get anywhere close to that. At least for today. I'm not saying anything for the rest of the week, as our crystal ball is, in other tools, and we'll look at those here in just a minute. But you can see that 5,900 level down here, a significant amount of net delta sitting there, and a decent amount of OI. So if we come down to that level, that would be the first area that I would look for some sort of action, reaction, possible demand level. If we see some of those these puts become in the money, and we see some sort of monetization there on the all expiries. SPX 0DTE, it was call dominated pre-market. If you read any of the SPX game plan from Paul this morning, it definitely had the opportunity to turn put dominated very quickly. And as you can see, move my place there, we're gapping down towards that 5,900 level, and then we have 58.75 below us. We have these strikes outlined with the red X's. That'll be important. So any weakness below 5,900, I'd look for 58.75. If we do see some sort of rebound, the first area that we would need to get above is that bottom of the drunken sailor range. So we're obviously below the drunken sailor range, so you should be looking at that commentary. For now, a rebound back towards that 59.20-25 level with a rejection would be a good opportunity to short. If we get back above 59.25, then we'd be looking for a move back towards 59.50, that outlined area, and then we'd be within the overall drunken sailor range. So significant uncertainty and significant volatility back and forth. So we'll see kind of what happens after this gap down this morning. Net stack command. Obviously, we're below those in the money calls there at 59.50 on the left-hand plane. So we'll see how that plays out after the first few slices of data. So we'll watch that. SPY GEX ratio here, we've continued to see it drop below 1. That is a bearish state as the short-term dated puts override the short-term dated calls, and we continue to see that drop as price was moving up. So obviously this was a significant divergence that we were discussing last week as the call speculators continued to erode and the short-term puts were continuing to take over. Qs just maintaining that weakness below 1, same kind of look. We saw that move up in the Qs, but the overall GEX ratio was dropping also, so make sure you continue to watch that. The SPX, we definitely saw that also. It's not below 1 at the moment, but we did see that erosion of those short-dated calls. We were talking about the right-hand plane above spot price OTM call speculation really not being present out in time, and we really need that to be present. You need the left-hand plane in the money calls below us to be that supportive type demand. But you also see the right-hand plane above spot price for call speculators and the opportunity for price to move up towards those levels. Delta balance for SPX, we see the weakness come in there projected, and then we do see a rebound after that, but we'll watch this day over day to see what market participants are doing. Obviously, this does not include the overall gap down that we're going to see in the market this morning. That might cause a little more fear and some sort of positioning that we'll watch throughout the day. SPY, we see the GEX ratio, or sorry, the delta balance obviously drop off significantly. We actually see it projected down towards -1. So obviously a significant amount of weakness coming in with short-dated puts just completely overriding the short-dated calls. The left-hand plane and right-hand plane completely degrading to become put dominated on out in time. Qs, we see the overall weakness there too, creeping in on the projection down towards -1 on the delta balance. And we see that left-hand plane, right-hand plane, any sort of call speculation really just evaporating on out in time. So we'll continue to watch this, see what positioning is towards the end of the year, and then obviously on out past that. We'll go ahead and head to the SPX price chart, 5,900. I've talked about that this morning. We posted that. I think that's a significant round Livermore number, large gamma delta number that I'll be watching. I'd anticipate some sort of just volatility around that. It's not going to be a clean overall, probably move back up. You're going to have some fear and greed components really coming into play around this 5,900 as market participants are opening their brokerage accounts this morning or opening their trading accounts and seeing a significant gap down towards 5,900. Again, if we do hold and recover 5,900, that could be an opportunistic long. Again, this would be counter trend. And then we have that 59.20.25 overhead. That's the bottom of the DS. That could be a possible rejection area. So what you want to do is shorten your time frame, shorten your position size. If you're looking for a counter trend trade, that'd be a 0 DTE. That would be a butt in the seat, quick move back up towards the bottom of DS at 59.20.25. And then we reevaluate that. But I'm anticipating this 5,900 to be what I call a stickiness area or stickiness level. We'll probably see some choppiness around that and see how market participants are acting and reacting with that. So with that said, obviously I would lower my risk today, heading still into the holiday of New Year's Day, probably lower volume in general. So we'll be watching the vol-d command intraday to see how market participants are positioning and see what the slopes of those centroids look like. But again, I would just be cognizant of the risk that we have on the table and the possibility that we could see more weakness creep into the market. So hopefully that helps. We'll be in the Discord in a few minutes. Let's make it a great day. Thanks, everybody.